And we are live from Bloomberg's world headquarters in New York. I'm Shonali Basak alongside Mike Regan. Tim Stenovec is on assignment today. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. And Mike, thanks for joining. It's been an incredible couple of days. You've seen Bitcoin throughout the worst of the market sell-off really hold up above 80,000. We're below that level now, but are you surprised?
A little bit surprised. I mean, if you sort of squint and look at the stock market and Bitcoin charts, they're still basically the same shape. Bitcoin did get a lot of selling done over the weekend, so it almost played catch up, I think, to the weak stock market at the end of last week there. But it's interesting that it's not really swinging as much as the stock market with all the news going on.
We're going to talk more about how it's been holding up, but today it's been giving back some of the earlier gains. Stocks are pairing some of their rally, and Bitcoin along with it. Risk appetite is fragile, of course, and investors are grappling with President Trump's tariffs that are set to go into effect tonight. We look at how the volatility could impact crypto deals. Plus, Tether explores a new U.S. stablecoin targeting institutional clients as legislation develops in Congress. And here's a look at Bitcoin. Since the tariff announcement, it's been trading in the $70,000 to $80,000 range amid the global volatility. Just as Mike was talking about, it was actually outperforming the NASDAQ 100 until today's surge in stocks. And now they're about even on a normalized level. And of course, they have been correlated. And for more, we are joined by Bitwise CIO Matt Hougan. Matt, are you surprised at all about how Bitcoin has held up? There has been this saying that if you have things that are liquid and you need to give it up, then you would sell. But you did not see liquid selling of Bitcoin as drastically this time around.
I think it's held up exceptionally well. I think Bitcoin bulls should be inspired by the performance, and it's set up to rally significantly if we get a period of stability in the broader equity markets. It's worth remembering the last time we had true economic chaos during the start of COVID, Bitcoin wicked down to $5,000 and even below that. Today, we're talking about $80,000. It's a different asset. It has a broader distribution of institutional ownership. And again, I think what it's telling you is once this market volatility stabilizes, we're going to see it return to new all-time highs and then beyond. It's really a display of strength from my perspective.
I want to jump off of the spot Bitcoin market and talk about options market, because in the middle of all this, at the start of April, you launched a covered call strategy over at Bitwise. How does this work, and what's the adoption been like?
Yeah, we're really pleased by the reception we've had for these strategies. They write covered calls on leading crypto equities like MicroStrategy or Marathon or Coinbase. The idea is that the defining feature of crypto, one of its defining features is volatility. And how do you translate volatility into an asset? Well, you write calls against volatile positions and you can generate really substantial income. So we've seen strong trading, particularly in the MicroStrategy product IMIST. I think it's going to have a broad reception from investors who want to have exposure to crypto, but also generate significant yields and significant income over time.
You know, Matt, obviously it seems like ideal regulatory conditions to launch a crypto exchange traded product, given the complete 180 in sort of the government's take on crypto since Trump was elected. Though, I wonder, though, what you're thinking about the demand for all these products. Are we in danger of sort of reaching saturation as far as how much investor demand there is for crypto exchange traded products?
Well, you know, the ETF industry is famous for throwing spaghetti against the wall and seeing what sticks. That's happened in every asset class, and it's happening in crypto. I think there is diminishing return to these smaller and smaller assets that you get one-off exposure through to an ETF. But I actually think the largest crypto equity or the largest crypto ETF hasn't even launched yet. I think the killer app in crypto is going to be a diversified index-based exposure. I think that could be as big or maybe even over the long term bigger than Bitcoin only. But certainly, I think that market is still wide open, still to come. Bitwise hopes to play in that space. And I think we'll see many ETFs succeed, some ETFs fail. But I think there are a number of very large crypto ETFs that still haven't launched yet.
Well, Matt, tell me how you're thinking about that sort of broad exposure ETF. I mean, obviously, Bitcoin is the big monster of the crypto market. Would it be a market cap weighted thing, or more of an equal weighted type of thing? How are you thinking about how that exposure will look like in an ETF wrapper?
Yeah, I think it has to be market cap weighted. Here's the bet that most people I speak with want to make. And I speak to financial advisors and family offices and institutions. The thing they have the most confidence in all of crypto isn't this layer one versus that layer one or DeFi versus DePIN. It's that crypto will be more important in the future than it is today. This is like backpedaling 20 years ago and making a broad-based bet on internet search rather than trying to choose between Yahoo or Ask Jeeves or Google. Why not get the broad trend right so that you have that exposure if what you predict long-term happens, which is that crypto, as an industry, 10x's over the next 5 years. That's the thesis I have the most confidence in. If that's what you want to express, you want to do it in a diversified index fund. We've been running the world's largest market cap weighted crypto index fund since 2017, the Bitwise 10. It's over $1 billion today. It's served that purpose for many investors. But I think an ETF that provides that exposure, that gives an easy button for investing in crypto, is going to be a huge win for investors and a huge success in the market.
Matt, Bitcoin might be volatile, but lately so have currency markets been volatile. You have traders betting on insane FX volatility on the heels of these tariff wars. If you think about what's to come ahead, a lot of uncertainty on who will win and how currencies will behave in those situations. What role does cryptocurrency play in a world where these currencies across the world are becoming more volatile?
I love that question. I think the answer to who wins in this currency war is Bitcoin, right? When I watched all the tariff confusion play out and what will Trump do and what will China do and how many bilateral deals will we negotiate, the thing that's clearest to me from all that is that we should expect the US dollar to move lower, that we're moving from a world of the US dollar being the sole reserve currency to a world with potentially multiple reserve currencies. Bitcoin benefits when fiat currencies go lower. Bitcoin benefits when there's new space for reserve assets. I think it's the cleanest investment response to the chaos and confusion we're seeing from this tariffs, specifically because it's the hedge against fiat currency debasement. And I think we're setting up for that in the US, in China, in Europe, and around the world. And I think investors would be foolish not to have at least some exposure to Bitcoin to hedge themselves from the chaos that's dominating the headlines right now.
Matt, to bring it back to Trump, it's hard not to notice that Bitcoin did reach that peak right on Inauguration Day. I'm curious what you make of that. Was it a sell the news type of thing, or is there sort of disappointment in the market about Trump not being sort of as friendly and the U.S. regulatory environment, whatever the case may be, not being as sort of enticing and welcoming to crypto as people had hoped?
Look, I think crypto's done just fine. If you measure from the day of the election until today, Bitcoin has vastly outperformed gold, it's outperformed stocks, it's outperformed bonds. It's been a phenomenal investment. I think it's just the canary in the market coal mine. It's been leading the market. So it ran up significantly between the election and Inauguration Day, pricing in a lot of good news. We got some of that good news, but we also got some volatility, so it paired off a little bit. But when you step back and look at this from a 30,000-foot level, a number of things remain true. Institutions are still woefully underexposed to crypto. They're going to be coming into the market. The government now owns Bitcoin, has removed a huge amount of regulatory risk. I think it's the best risk-adjusted moment to buy Bitcoin that I've seen in the market. So, has it pulled back a little bit? Yes. But if we span out and measure since Trump won the election, it's done exceptionally well. And I think its best years are ahead of it.
Matt, we thank you for joining us today. That is Bitwise's Matt Hougan, of course, in the middle of all of this volatility. Remember, deals are actually still happening in crypto, despite what we're seeing. For example, just today, Ripple announced an acquisition of prime brokerage Hidden Road for $1.25 billion. Bloomberg's Bailey Lipschultz covers deals, and he covered Circle last week, who had filed for an IPO before the tariff announcement. Circle's numbers were stunning to a lot of people, but in the commercial break, you made a great point to me about how if you see a recession and if you see yields just plunge, then that's going to really impact the type of income you're seeing from a product like Circle stablecoins. Can they make it out to public markets anytime soon.
They certainly want to. And so when you mentioned they did file publicly right before the tariff announcement last Tuesday. So in theory, they could meet with investors right around the Easter holiday and price an IPO shortly after that. The big question is, A, what's your valuation? This is a company we've been keeping an eye on. When they try to go public via SPAC, valued at $9 billion. That doesn't seem to be the case in this current market. And really, when you look at what it takes to bring in institutional investors, the big question is, if markets are going to continue to be volatile, do you want to allocate resources to a company that, as you made the point, if yields are lower, that impacts the fundamental business. And obviously, Trump is pro-crypto, but what does that actually mean for this company?
And we will see some stablecoin legislation soon. But back to that Ripple deal as well. Speaking of stablecoin companies, this deal to buy Hidden Road, $1.25 billion. What did you make of that?
Well, it's a big deal in the crypto world. You know, that's Ripple's biggest acquisition. I think it's one of the biggest crypto acquisitions in history. And it really speaks, I think, to that idea of a prime brokerage in the crypto world. I don't think people really realize that they are in play in crypto, especially since FTX. There's been a lot of demand for sort of a trusted party to stand in between the wild ecosystem of crypto and your own accounts. And Hidden Road, it has a pretty good pedigree. Mark Ashe used to work for Steve Cohen at SEC Capital and Point72. So a pretty fascinating deal. And to me, one of the really interesting elements of it is Ripple really seems to want to use this deal to broaden adoption of their own stablecoin. They're going to encourage the use of their stablecoin on Hidden Road as collateral and whatnot. So a lot of the stories in crypto these days sort of circle back to that stablecoin idea.
It's like an on-ramp, off-ramp for the hedge fund industry in a lot of ways into crypto assets. Speaking of hedge fund managers in crypto, Galaxy potentially listing on NASDAQ. I feel like this has been a years in the making type of move.
It has, and especially with the Biden administration being so, at least from crypto advocates, so anti-crypto, this is really unsurprising, similar to Circle finally flipping public that they can make a listing here in New York on the NASDAQ. We are seeing Galaxy Digital shares. They do trade in Canada, up 15%. Guys, biggest day in terms of a gain for the company since right after the election. So a big move. We have seen outside of crypto investors piling into stocks like CRH that are redomiciling and shifting their exchanges, the exchange home to the U.S. So maybe people getting ahead of their skis. But I don't know, Mike, if the long-term vision kind of aligns in your view.
I think Mike picked the right day to change that listing. If he had done it before yesterday's session or the Friday session, it might have been a different story. But
just incredible.
Fired the news into a risk-on market, so good timing.
Yeah, and the last 2 years in a row in Canada, it was up 173% in 2023, another 122% last year, and of course, the idea of NASDAQ could give it more liquidity. Bailey Lipschultz, we thank you so very much for your time covering all those deals in the crypto world. And coming up next, we're going to discuss the tariff impact on crypto deal making and regulation with Pantera's Katrina Paglia. This is Bloomberg.
Our financial system in this country is antiquated. Our financial system in this country has been punitive to so many different people. And so we're reinventing the financial system. I'm all in personally. I really, truly believe in this with every part of my heart and soul.
That was Eric Trump on the show last week, speaking after forming All-American Bitcoin, a mining firm, of course, with Hut 8. We're going to discuss crypto and deal making and regulation with Katrina Paglia. She's Chief Legal Officer at Pantera. Of course, one of the larger investors in the space, have been doing it a long time. And what's interesting is you guys have focused on Bitcoin, but also very much outside of that as well. When you look at what's been possible so far under the Trump administration, it's been very clear that the stance taken by the prior SEC is no longer. However, you did not see that much movement otherwise yet. And you can see it in the price of Bitcoin, how much it's fallen since November 5th, or, it's marginally higher at this point compared to where it was. What do you want to see?
I mean, I think we have these macro headwinds happening right now, right? Like the tariffs are what they are. There's no way that the crypto industry isn't going to respond in some correlation to what we're seeing with traditional equities. But I think the important thing to focus on is the pullback on Bitcoin in particular was significantly less than what we saw for the equities over the last several trading days. And to me, that indicates, one, the support for the industry is still there, and two, it might start being a little asynchronous in terms of how we view it versus traditional equities. I mean, crypto is borderless. So when you think about the impacts of tariffs, there's not going to be the most material impact, but obviously we're going to follow the kind of the headwinds with the market. But you see this disconnect kind of starting, and I think that's positive in terms of the buy-in and the overall global acceptance and the other alternative things that you can do with this asset class.
You know, Katrina, I'm curious if you're legal officer, so to put your lawyer hat on and think about this dramatic 180 in policy we've seen already so early in the Trump administration. And I'm sure in many ways it makes your job easier to some degree. But I'm also wondering if it makes it different and difficult in other ways. You know, I'm thinking about the story today from the Justice Department, basically scaling back what it does when it comes to crypto crimes and what it considers to be in their wheelhouse for crypto crimes. In a way, does that make it, tougher for firms like Pantera to sort of have to police the industry themselves, to do the more due diligence and not have the government sort of on the case as much?
That's a really interesting question. So to your point, there has been a significant change in policy from the administration since January 20th, right? Like all these cases continue to be dropped. Changes in terms of staffing at the SEC. The DOJ, to your point, terminated its crypto task force this morning with a pretty aggressively worded memo, actually, kind of criticizing the prior administration. To answer your question, no, I don't think it makes anything significantly more difficult in terms of policing. I think that the agencies are still there, the frameworks are still there, the enforcement divisions are still there. I think what we've seen is a pullback on the crypto-specific regulation by regulation by enforcement of the prior administration, and I don't think that's a bad thing. I think that's going to foster innovation, and that's going to allow us to build the right rulemaking framework with the right partners at the table going forward.
I remember the last Trump administration, Jay Clayton was at the table at the SEC, and he cracked down on a bunch of things. That was the ICO boom. Does everybody remember that? I kind of worry about this again in terms of the amount of meme coins, the amount of tokens that we're seeing, and the willingness of exchanges to loosen their standards. Does that worry you outside of the realm of the tokens that you see as investable?
No, I think that the American public is going to kind of figure out what the meme coin situation is. I don't know that we necessarily are overly focused on it. There's always going to be something that comes out that's got a little bit of hype on it, that's got a little bit of attention. But overall, the broader blockchain and crypto industry is a real asset class, and it is subject to regulation by various agencies, right? You have the SEC, the CFTC potentially coming into play here, and then obviously the DOJ and the other criminal agencies are not going anywhere. So, I expect there to just be continued institutional buy-in and adoption, and that will just further sophisticate our asset class.
Katrina, we have to leave it there. We thank you so much for joining us here
Thank
on
you.
set. We didn't even get to stablecoins. Of course, that's a big one, but of course, we will keep keeping our eye on that. That is Katrina Paglia of Pantera. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. Stablecoin issuer Tether Holdings is considering launching a U.S.-based token aimed at institutional clients, and it would likely target faster payment times between banks. This comes as President Trump has gotten behind a stablecoin bill, which is now progressing through Congress. We're going to now bring in Anna Yuan, founder of stablecoin platform Perena. Actually, the bigger question I have is less about regulation and more about the macro. This whole idea that if you saw a recession in the United States and you would see a big drop-off in yields, that would impact the demand for stablecoins as well. How are you thinking about that dynamic?
Thanks for having me back, first of all. I think the macro dynamics are complicated, very nuanced. So on one hand, if we're seeing tariffs continue to impact manufacturing and the economy to increase friction in trade in emerging markets, I believe we're going to see people and businesses flock into dollars. So it'll actually increase the demand of dollars. And when you mentioned Tether, they're already a significant holder of short-term U.S. Treasury bills, and this trend will continue to increase. On the other hand, I am while there are talks of interest rates coming down, if inflation continues to stay high due to tariffs, we might enter into a phase of stagflation. But either or, I think the dollar's dominance and continued importance in global trade with or without tariffs will continue to increase.
Anna, obviously Tether has just made boatloads of money just parking those reserves in treasuries, and it really seems to be drawing in a lot of competition. A lot of traditional firms, like PayPal has their own stablecoin. A lot of traditional and crypto firms are thinking about launching their own. Even this Hidden Road deal today, Ripple buying Hidden Road, it seems like a big part of that motivation is to broaden adoption of Ripple's stablecoin. So I'm wondering where you see that all going. I mean, is there room for all these stablecoin ambitions in the market, or are we likely to see sort of the field shrink down to a few major players?
No, I think it would be a lot of stablecoin players in the market, and this trend will continue to increase. In fact, that's the thesis that Perena is built on top of. So with the stablecoin bill passing, or most likely to be passing, we'll see a number of otherwise very prominent and established, likely risk-averse U.S. financial institutions, starting with PayPal, but also likely banks and other types of FIs coming in to either issue their own stablecoin or do what Global Dollar, which is one of the consortium-like stablecoin issuance. So we'll see at least a couple, in my opinion, at least a couple dozen notable stablecoin issuance.
Right. Anna, we only have about 30 seconds left here, but if you had to point our viewers to the most interesting potential stablecoin use, what would it be?
Financial transactions, payments, and the combination of payments and financing.
Anna, that is a really fascinating set of circumstances to be walking into. That is Perena's Anna Yuan. It's interesting, Mike, because one thing I look to is how Robinhood has been using stablecoins to facilitate 24-hour trading, for example. They think that this is going to become commonplace.
Yeah, and there's a lot of talk about sort of cross-border payments. Instead of taking days to send a payment to another country, you can do it instantly. So there's a lot of potential there for sure.
I also think what you were saying before about that on-ramp, off-ramp between hedge funds and the traditional crypto and markets and stock markets could be interesting. Before we let you go, guys, I want you to check on markets here. Of course, we're seeing a rebound after that 3-day decline that has been pretty brutal. We are off of session highs for the S&P 500, but still up 1.5% nonetheless. We're seeing that risk appetite pour back into broader markets. Maybe not as much for crypto today, but of course it has held up. That's all for Bloomberg Crypto. Big thank you to Mike Regan for joining. Join us same time, same place next week.